Hey, wealth warriors. Are you ready to redefine wealth and master your money mindset? Welcome to Women of Wealth. I'm your Gen X host, Hollywoods Gray.
And I'm your millennial host, Ali Ramo.
Today, we'll be talking to the amazing Brittany Russo about leveraging life insurance in your business plan and personal financial plan. I have known Brittany for a number of years, and she is absolutely the best.
I met Brittany a few years ago at one of our conventions, and every time I have heard Brittany talk, she was incredibly helpful. So I can't wait to get to know you more and pick your brain some more. So to start us off, Brittany, can you introduce yourself and some insights on your journey in financial services?
Absolutely. I'm excited to be here, having known both of you for as long as I have. It's just a phenomenal opportunity to reunite and really change some thought processes that are out there and get people excited about the things we're excited about. In terms of my journey, though, interestingly enough, nobody wakes up and says, I can't wait to sell life insurance or annuity products, right? That's not something that in kindergarten, when they say, what do you want to be when you grow up? You don't draw a picture of that. So my journey actually just started out of college, and responding to whatever job advertisements were actually out there, because I grew up in rural Vermont. There's not a ton of job opportunity, or certainly wasn't back then. So I was recruited by New York Life. Actually, I got my first opportunity in the industry through selling for New York Life, but I was 22. Right? Nobody really wants to buy life insurance or take financial advice from somebody in their 20s who's just learning how their light bill works. So from there, having an immense amount of training, I was able to actually get a job where I am today. And I was able to grow from being just a consultant inside the company and then grow myself out to be an external wholesaler where I get to work hands on with agents across the country. And it really gives me a ton of octane in terms of like my day-to-day job, because I'm not just helping people in the industry find their financial freedom. I'm helping America find financial freedom. I'm helping America find protection. So I really get juiced up in kind of two different avenues of what this industry can do. But I kind of stumbled into it. And my mom always joked that because I have the gift of gab, I was either going to be like a lawyer, a politician, or like the head of some gang. And here I am, at an insurance carrier, just using that opportunity to speak to help change those lives.
Well, she definitely got that right. You do have a gift of gab, just like most of the women that we have on our show. They are passionate about what they do, and so, well, let's just jump right into it. Can you describe a little bit about what life insurance is? I know it's a very basic question. You think most people know that, however, they don't. And we also want to talk about why it's important to women for them to make sure that they know what it is and that they plan for life insurance.
So, one of my favorite things that I think I've learned is that life insurance is actually about 200, maybe even a little over 200 years old, right? We often think that it's this wild phenomenon that just happened in the last couple of decades, and only these MLM agents are out there to get your money and steal it and sell life insurance. It's not true. It was actually started way back in the day. Presbyterian churches used to just really go around and collect funds, and they would use those funds at the time of passing to help a family continue their lifestyle. That's it. That is the history of life insurance. And at its core, that's exactly what it still is today. It's an opportunity for a family to advocate for themselves, not leaning into a church, not leaning into GoFundMe, but really for themselves to have that protection and that peace of mind that something that could happen to them can really affect in a ripple fashion so many more people. Why not get that protection today and make sure that none of that takes place? So that's the antithesis of it, right? But as we've grown in our technology, our advancements in society and medical, life insurance has taken on a whole different meaning. So life insurance is a chassis, a financial chassis, where when you put money in, you have the opportunity of really putting money in to get that true protection, or putting money in and earning compound interest that can take you even further in your financial journey. So it's kind of got a couple of different avenues, but the everyday thought process is it's a protection opportunity.
Right on.
So you were going into like how to make interest with life insurance. Can you go into that a little bit more? And because you're talking about term life insurance and permanent life insurance, what is what are some key aspects to look at when you're deciding between the two?
Yeah, so I love that question. I often When I reflect on term versus permanent, I look at it very similar to growing your personal finances. So what I mean by that is when I left my parents' house and graduated college and I was going into the real world, I didn't have money yet for a house. I didn't have a down payment. I didn't have a mortgage payment ready. I couldn't even conceptualize how much money I needed in my savings account, right? But I knew I needed shelter. I needed something over my head. So I got an apartment that I could afford. And then as time went on for me, I went, okay, Brittany, you're taking that, call it $1,500 a month, depending on where you live in America, and you're giving it to your landlord to put the roof over your head. And it's doing nothing for you financially, but you're working your tail off for that 1,500. What if you could put that 1,500 into something you own? And that ownership gives you some value and some equity that you can use in your life in other ways, right? So instead of giving it to somebody else, give it to yourself. So that to me is term versus permanent. And here's what I mean. The term policy is your apartment. It's your basic protection, your basic shelter at a cost you can afford and financial literacy that you can understand, which is to say, I understand my budget. I understand how far it's going to take me over the next year or two. But then when you really get some wherewithal and you start to think, how can I make it work for me? That's when you pivot into that permanent insurance policy, because that permanent insurance, just like building equity in your house, is allowing you to take your premium payment, give it to a carrier. That carrier is going to invest it for you and still protect you with that investment. And then you're going to be able to grow that cash value, which is in the same essence, your equity. So, it's really just leveraging what some of the wealthiest people in America have already known, but you're really able to grow it through your own journey and certainly your own financial literacy.
I think it's such a great point because, I've met people that are very young that have, lost people. I mean, my dad died when I was 21 years old. He was 48, and they certainly did not have life insurance. However, they could have. And I have a whole, I've talked about this before on the show. I have a whole, theory about how they could have really protected themselves and set themselves up to win, even if, they were young and they couldn't really afford, some big payment or something like that. But why do you think that, why do you think it's so important for women to really understand this and put this as part of their comprehensive plan?
So insurance, just as I mentioned, has evolved over time. And one of the forms of evolution has become using it for more than just protecting your loved ones at the time of death. Now we have these incredible riders that actually help your family if you get sick or injured. And that concept for women, I think, is more important than anything else because, for example, my grandmother had 5 boys, right? So she was a single parent of 5 boys. And if something happened to her and she needed some money to help with her sickness or her injury, often the boys aren't the most nurturing, right? They're not going to take out of their job to come sit by the bed and take care of mom. No. They're off, hanging out with the girls, having a beer, playing soccer. Hey, mom, I'll check in on you later, right? Like that's just kind of, I hate to say it, but that's just kind of traditionally how it's looked at. So women having these policies, I think allows us that opportunity to have that flexibility and that comfort and that peace of mind that if we get sick or injured, we have a little bit extra in our pocket to really help our family continue through our sickness or help me be sick comfortably. Because really studies do show, and this is just, I think when you hear it, it makes so much sense, but studies show you can heal faster when you're not stressed and when you're comfortable and when you're able to take that time. And as women, what do they say? We always have like 7 browser tabs open at the same time, right? We've got the Amazon, the Target, the bank account, the social media. So if I'm sick, I don't want my tabs open. I want to take that time and rest and recuperate and binge watch some Bravo TV show and just enjoy myself and not worry about putting my husband or my children or my parents in any deficit to help me do that. So I think that's one element, Holly. I think another element that women should consider is building financial freedom, right? It truly hasn't been that long since we were able to have our own credit cards or sign off on our house by ourselves, start our own 401k. It hasn't been that long. And so having something like a life insurance policy that you can use to protect your loved ones if something happens to you or have that security if you get sick. But hey, what if I wanted to start a business tomorrow? Right? Like what if I just wanted to get out there and hawk my really exciting new crochet that I just learned how to do? But my husband isn't really excited to give me the capital for that, or my family unit doesn't have the capital to give because we're paying for school and taxes and so on. So now I can leverage that life insurance, that cash value, loan myself money from my own policy and create my own capital and create my own future. Mary Kay, I think Mary Kay was one of the companies that did that. McDonald's has done it. Walt Disney has done it. Purdue Chicken Farms has done it. There's so many people who thought, man, if I could just find a little extra capital somewhere, oh shoot, my cash value life insurance that has $1,000, and that 1,000 can make me 100,000. So I think
Yes.
that's another place, is women being able to be self-sufficient there.
Great.
So, and you talked about, starting a business with your cash value. What are some other things that people typically use that cash value for?
Oh, great question. You can get so creative with your cash value. And here's why: no one can stop you. As long as you have the money in your account and that account will last your lifetime, then you're good to go. You can use it however you want. So, do I want to start a business? Do I want to go back to school for my master's degree? Do I want to put my husband through a certification program? Pay for some remodeling in my home because my kitchen doesn't look as good as I wish it did, right? Take a vacation to France. All of this stuff, nobody can say no to me as long as there's money in the policy. That's the kicker that I think a lot of people misunderstand or gets misrepresented, is it's looked at as its own savings account or its own bank account. It's not. It's truly a life insurance policy that has to last as long as you are alive. That product has to stay in force up until the day you pass away. So as long as that money is there and plentiful, I can access it as much or as little as I want, and I can use it however I want. And that's the beautiful part of these insurance policies.
So when you're talking about taking money out of your cash value life insurance, whether that's permanent, whole life, or there's many kinds of universal life that could fall in as well. However, can you talk a little bit about the tax implication? Can't even speak today. The taxes that you would pay on that if you're withdrawing money, and how you can do that as a tax-free solution as well.
Yeah, so I should caveat it by saying you should always contact a tax professional anytime you are accessing any of your financial products. It doesn't matter what product it is, you should always be consulting a tax professional just to make sure you're on the up and up with any regulation changes. But to your question, and at a basic level, as long as the policy is not a modified endowment contract. Okay, and if you're just an average consumer listening to this call, you're like, man, I have no idea what that is. And you shouldn't. It's something that insurance agents actually, they are the ones who learn it. And what that is it's a test that the government does on the insurance policy to make sure that you're only putting in as much money as appropriate, so that it's not an investment vehicle, but rather it is truly a well-funded life insurance policy. And that gets very complicated. But as long as your professional has helped you understand that your policy is not a mech, then you can borrow against that policy tax-free. And that's the beauty of it, because if I'm putting in over the next 10 years, $10,000, and I want to access that $10,000, I want to be able to use it, like I just said, to start my business. Well, that's when I can go in and borrow from it, because my insurance agent, Holly, has made sure that I've structured it so that it's not a modified endowment, meaning it complies with the government regulations. And that's all it is. It's really leaning into a professional, which, by the way, kind of sidebars me a little bit to say that I'm not a fan of like direct consumer, like carrier to consumer. I'm not a fan of people buying their life insurance from a website. I really do think you need to work with a professional, eyeball to eyeball, kneecap to kneecap, because there are so many ever-changing moments in this industry, and you can't keep track of them as a consumer. You need someone who's specialized. And I often use the analogy that when you go to the doctor and you have something happening with your heart, you don't tell your doctor, hey, I want this medication for my heart. You say, okay, Dr. Allie, what should I be taking to make myself healthy? And then Dr. Allie gives you recommendations. And then you follow with your heart what you think that recommendation that's best for you should be. Financial services is no different. You shouldn't be forced into a stock or a crypto or a life insurance policy because TikTok told you to. It should be because you sat with a financial professional, you took an inventory, you took an intake, just like your doctor does when you walk in. Blood pressure, height, weight, eyeballs are white, nails aren't yellow, right? Those intakes are exactly what the financial professional does. Then they give you your recommendations. So I think it's an important thing to connect with the tax question, because I think we have decided that social media and internet access has given us so much information that we're all pseudo professionals. But there's that saying that if you're a jack of all trades, you're a master of none. So go to the person who really understands it, and I don't think you can go wrong.
You make a valid point, and I meet with so many of my clients who are like overwhelmed by the information that they don't know where to start. They're confused. This person told them not to do this. This person told them to do this. And I just reiterate to them how individualized all of this really is. And so to make it so generalized that everyone should do X, Y, or Z uh, is a disservice to those people. So
Well, and
I agree.
it's the same thing as what's your risk tolerance, or what's your love language, or it's like, it is you. It's your personality test of financial services, right? Like in my household, I'm extremely conservative. I have my cash value life insurance. I have my 401k. I'm blessed to have a little bit of a pension situation. I like the basics. My husband loves crypto, loves alternative investing, loves the idea of real estate investing. Like my husband is, so we laugh because we didn't know this about each other. We were 20 something when we met, and he's a wonderful man. So I got really lucky, but I didn't realize I'd be rocking with someone who just basically wants to put it all on red number 7 and hope he retires. While I'm over here, like, I am going to retire, So it's this beautiful blend that we have, but we don't fight about it because we understand that I've got you, you've got me. Like, he might make us a millionaire, but I'll make sure we don't live on the streets, right? So I think, Allie, to your point, there is no cookie cutter solution. There's many carriers, there's many products, there's many divisions of financial services, but what combination best suits your desires and your goals? I think that's the most important part for consumers.
I agree. I mean, it's funny because sometimes people will come to me and they're like, well, how do you do your investing? Because Bobby now is a financial advisor, my husband. However, we have another financial advisor as well who does some alternative strategies for tax planning and whatnot. And they're like, so how many advisors do you have? And I'm like, I probably have 6 total that I go to. And then, I mean, I'm probably overinsured because of my situation. But tell you what, no one in my family is ever going to have to do a GoFundMe. So I want to talk about that because I know it's something you're really passionate about, Brittany. And I want to share a quick story. So one of the people who is very important in my life, she's like a second mom. She recently had some health challenges. And she does not own one product from me. She does not have her life insurance with me. She doesn't have long-term care with me. She doesn't have her cancer policy with me. But what I'm so happy about is that she will also never have to do a GoFundMe page because she has all of those set up. And she does have me in her life, so I do know how to call and ask the right questions and make sure I know the paperwork we need to get and all that kind of stuff. So let's talk about GoFundMe because I know this is something that, like, this could get you really going and it can also get you really fired up. So yeah, let's just lay it all out there for everyone that's listening, Brittany.
There's a crazy stat, and Holly or Allie, if you remember it, please fact check me. But there is some crazy stat that like less than 10% of GoFundMe's ever get properly funded. Like that, like mic drop. You're using that as your plan, and less than 10% or some variation of that metric are ever fully funded or funded to a place where someone can actually use them. That's scary, right? And then I think not just about that, but I think about like during COVID, for example, I felt like I was getting a GoFundMe link or like a what do you call it? Almost like a proclamation for help me, like once a week. And it's like, guys, I'm barely making it over here. Like, you think I have $100 for each person who I know got sick to help them get by while I'm over here trying to get by myself? Like, it fires me up because I do think that it's a lack of financial literacy. It's a lack of education because the concept is I can't afford insurance, or I won't need it, or what is it really going to do for me? And that all comes down to education. And while I don't agree with people getting their education via TikTok or YouTube or any of that, I do think those platforms can introduce you to a professional that probably fits your culture, fits your mindset. That person can help you get there. But GoFundMe to me is like, you might as well put that like half, like the water bottle cut in half on the counter of the gas station and hope someone puts a quarter in there. Like that's basically what you're working with. And so I think for the $25 a month, it could cost you just to have that level of protection, and not just on yourself, on your children, right? Like I have two friends, they're married. One is a nurse and her husband is a CPA, and they just had a baby in September. And I've already had two different conversations. I had the conversation when they were getting married, right? Never got insurance then, even though I told them how important it was. But I'm talking to a CPA, Holly, which is not easy, right?
Right.
And then, but I'm talking to a nurse. I'm talking to a nurse who sees sickness and death and unexpected things come into her hospital all the time, right? So I'm working with two very different people. And then they had their daughter in September. And so I'm talking to them again about life insurance. And I'm trying to get him to understand that it's no longer this concept of being taken advantage of, being swindled by a carrier. It's truly just doing the right thing for your family. You don't have to get $1 million policy. Your wife doesn't need to go buy Louboutin and a Porsche. She just needs to have enough money to pay for childcare and to pay for school and to pay for cheerleading if that's what their daughter wants to do. And this is the conversation I had with him. You're willing to give your child a lesser lifestyle to save a few bucks right now? And he was like, well, no, because of course he's a new dad. Like he's newly in love. He's newly infatuated. He also has had no sleep. So he's just like delirious. But the whole point is like, this is the reality. And then you really should be getting them on your children, because children get sick all the time. And if my child is sick, I don't want to have to go to work just to pay for the mortgage, just to pay for the hospital bill, when I should be sitting next to my kid in their hospital bed while they're getting the IV put in. It's like, think about it bigger than you. Just for a second, think about it bigger than you. Is that 5 less Starbucks drinks this month? Probably, but they're not good for you anyway. Think about more than you, and then you'll understand the power of insurance. And that's why GoFundMe just gets me so heated, because it's like, I'm sorry, when did I decide I was going to take care of your family holistically? Like, yeah. I'll be there for you. I'll be your shoulder. I'll bring you a dinner, but it's just getting out of control.
Yeah, I totally agree.
And you're bringing up the points of kind of what people are covering as far as illnesses go and things like that. Since this is an intergenerational podcast, what kind of things should people think about at different stages of life when they're thinking about how much coverage they have? Like does an 18-year-old go out and get a life insurance policy as they're going off to college? Or a 22-year-old who just graduated college and they're now working on paying off their student loans. So take me through different times of life.
Great question. And funny enough, I just had this conversation with my sister. My sister is 29. She started a new job. She just moved to a new area. She's single. And she said, do I really need life insurance? Like, what good would it do me? And I'm like, oh, sister, you came to the right person. But we started talking about this idea of, at her age and having no, ties to anything. Yeah, no responsibilities really, right? Is setting up her financial future. Because even at that age, and granted, I'm talking about someone who's cusping 30 here, and we could talk about that younger subset in a minute, but the idea is that, hey, when you have the opportunity to retire, do you want to do it at 65 or do you want to do it at 55? Do you want to do it in upstate New York where it's freezing half the year? Or do you want to move to Miami where it's a little warmer? Like, what is the lifestyle you're trying to achieve? And right there, Allie, I think it helps someone understand these products. When we think about them just as that protection and that death element, we're misunderstanding the overall potential. And that's, I think, where some of these younger generations do get excited. There are a lot of studies done on Gen Z right now. And what's the Gen Z? What's after Gen Z?
Alpha.
Okay. Alpha. So Alpha and Z are actually some of the biggest savers for retirement right now. Like, they're actively investing or putting money into IRAs, annuities, 401ks, because the 401k is younger than me. Like, I'm only 36 and I'm older than the most major retirement account everybody's trying to use to retire. So no wonder there's a deficit. No wonder there's a gap. And since we're talking intergenerationally, we're looking at Holly, and she had even less time to put into that vehicle, right? So when we think about the newer generations, they're seeing the older generations fill gaps, be nervous, have to save more, have to give up. And so I think the younger generations are starting to go, I'm not going to be like that. And so, yes, we're seeing in the headlines, they're not buying houses and they're not doing certain things in the economy. Well, guess what they are doing? They're saying, I'd rather put half my paycheck, or sorry, let's say a third of my paycheck into retirement, a third of it into savings, and a third of it into entertainment. But you know what? I'd rather put it into retirement than a house if my house is overvalued, right? So they're thinking actually pretty strategically about their money, which I do appreciate, even though the headlines make it sound way more astronomical. So then as you scale up, to your point, there are milestone needs, right? So for the example of my friend and her husband, they have a daughter now. So at that point, regardless of your age, when there's a child involved, you have to think outside yourself, right? Like, I only have a dog. I'm not going to leave money to my dog, but I do have money on my home in case something happens to me. I want my husband to live in the house that we built together. I don't want him to go, well, now I have to move because we're dual income, because majority of millennials are dual income now, right? So we've developed these lifestyles that are so intersected that should one of us pass away, the other one is going to live a lesser lifestyle. I think on top of that, as you scale up in the generations, you also want to have protection from estate taxes, right? So if Holly and Bobby, if something happens to them and they're leaving their house to Jackson, well, Jackson might be in a really high tax bracket because he's an executive somewhere. And so now he's taking Holly and Bobby's house and he has to pay his taxes on that house versus his parents were in their late 60s and 70s, whenever, and they had a lower tax bracket. So buying that life insurance to cover your home so that when Jackson takes it over, he can use that death benefit on those taxes. I mean, each generation has a purpose, but it's all about thinking ahead and thinking strategically. Because if I'm Holly and Bobby, I don't want to think about my estate taxes and buy life insurance when I'm in my 60s, when it's like 10 times the price. When I have Jackson, when I'm 30, that's when I want to buy it because it's more affordable. It's something I can really comprehend and put some budget towards. So I think it's less about what currently is important to the generation, but really what the next few decades will look like for the generation. And I think, again, Gen Z and Alpha kind of have that figured out.
Well, let's see, because Alpha, so Jackson is an Alpha. He was born in 2011. 2010 is the first year for Alphas. So I'm glad that they're already saving at 12 years old. He does have life insurance. He got a policy when he was 17 days old. I mean, I have two policies. I have a term policy and a permanent policy. The permanent policy is the cash value one. Eventually maybe I'll be able to take income on it. We'll see. However, that's not what it's necessarily for. It's necessarily for protecting me, some of the benefits you were talking about, if I got cancer or something like that, I'd have a place to go take money out of. And I also love the fact that, the Gen Zs, which is where Adrian is, our oldest son, he's in the Navy right now. And I was talking to him about buying a house and he's like, oh no, I don't want to do that. I want to buy one in California. I'm like, oh no, you don't. You want to buy one in Virginia or one of the other states that you might move to being in the Navy, right? And we've had a policy on him since he was 11. That's when he moved in with us. He was 11 years old. And bless you for saying I was in my 30s when I had Jackson, because I was 43, girlfriend. But I did have life insurance already. Yeah. So anyway, I just think it is important for different generations. And I also think it's important for, you to talk to your kids about it. Like Jackson knows. I mean, sounds kind of morbid, but it's just my life that I've had. When we went to go do our funeral planning, he came with us. He was 10 at the time. It wasn't heavy or anything. It's just that we're older parents. So we have to think about that kind of stuff. I mean, like I said, my dad died when he was 48. I'm 54 right now. That means that, yay, I've already outlived him. And, I didn't have the knowledge or the training that Jackson has. And sometimes maybe it's a little bit too much. However, he's a pretty smart kid, so he can handle it. But I mean, those are the things that I think are important that we talk to our kids about and make sure they understand about life insurance, about investing, about putting away money. I mean, he has more money saved. He always says like, oh, I could pay for that, Mom, because he gets, money for different holidays or whatnot. I'm like, okay, good. So I do have him pay for some of that. And he does chores and gets, an allowance or we call it a commission in our house. And Brittany, he's probably going to be an executive at our business, and take over our insurance practice after he gets out of the NFL. So maybe at some point he'll take care of us.
He has it figured out. I love this.
He has it all figured out.
All figured
That's
out.
that Gen Alpha. That's that Gen Alpha. They've got
That's
it figured
Alpha,
out.
yeah.
Gen Z and Alpha have it all figured out. So we'll see. I mean, you know how big he is. So, I mean, the chances are, they're there if,
Yeah.
he does the right thing.
So last thing about kind of the like utilizing the cash value life insurance and protecting your wealth, how might high net worth women use life insurance to protect their wealth and their legacy? I know you talked a little bit about the estate, but can maybe talk about businesses and things like
Yeah.
that life insurance can protect.
Yeah. So, I mean, again, you should work with a proper strategist when it comes to all of these designs and things. But if you're a business owner, woman, often, and again, this isn't me just saying this off the cuff, there's studies around this. You don't have a lot of comfort in admitting what you don't know. And so, therefore, you don't want to walk into a financial firm and you're talking to some guy who's bald and probably could be your grandfather and they're just like, talking down to you. But there are some great concepts around protecting your own wealth through life insurance, because in most situations, and every state's different, it's kind of a protected element of financial products, meaning that, like, my friend got divorced recently and had to give up half of her 401k in that divorce. It was just part of the state law that her husband was entitled to that money. And I think, dang, like, he didn't go to work. He didn't, like, in my job, he didn't fly across the country for a week on end to make ends meet, so I think that these, like, life insurance in a lot of ways is a product that really doesn't have to be split, doesn't have to be divided, doesn't, in many states, it's not even part of the FAFSA when your kid goes to college. There's just a lot of protected elements to life insurance because, again, it's not an investment. So it's not treated like an investment. It's this really beautiful product that's meant to protect you, but can help you live this incredible life that you're desiring and you want to be a part of. So it's more of this idea of sheltering. It's more of this idea of investing in yourself through the protection elements and through the opportunity. In terms of, like, direct strategies, I mean, there's so much that someone can do, whether it's a buy, sell, or qualified plan, or even these ideas of split dollars and premium financing. I mean, there's just so many designs. And I think that kind of goes back to our point before, where this is not a cookie cutter industry. It is not give me $10 and I'll give you a $20,000 death benefit. That doesn't exist anymore. It's so personalized and situational. And I just implore anybody listening to this call, if you are a woman, a female business owner, or you are a female entrepreneur, I can't tell you how many women I know who have Arbonne businesses and doTERRA businesses and what's that, like, that hair tool that everybody uses on social media. And they don't have retirement accounts because they're stay-at-home moms who are doing this from their guest room on a laptop, and no one's walked into their home and said, have you ever considered a 401k? Like, I can get you that. Many people think you have to work for a company to get those advantages and those products. So I'm just thinking, like, the full scale of female business owners or what have you. I think there's just, again, it's vulnerability and saying, hey, Allie, I own a business or I'm starting a business. I don't know what to do to protect myself. And I think that will go a long way. And I don't know that answers your question, Allie. There's just so many things out there. But I think more important to me is encouraging people to speak up, advocate for themselves, and be willing to be vulnerable about it.
Yeah, I mean, at Women of Wealth, that's one of the things we really are doing to educate people on the different products and services that they might need in their whole plan. I mean, there's a lot of business owners, female business owners that I've ran into that don't understand key man insurance. They don't understand some of these things because they were never taught it. And I think also having women talk to women is very powerful. I know, I was just at a high-end mastermind. That's why I was in Dallas. I was at a high-end mastermind. There was 14 business owners in the room. And, there's half of them are multi-million business. Their business is worth multi-millions, and they don't have key man insurance or key woman insurance. Let's just call it that, right? And so I have helped a couple of them get those types of policies in place because, if something happens to them and they don't have their exit strategy set up, or they are not taking advantage of profit sharing or something like that, they're really missing out on what some of the guys have already been doing for years. Like Brittany said, it's not that long ago that we couldn't have a credit card. 1973, guys, 51 years ago. We couldn't have our own credit card, ladies, with our name on it. We couldn't have our name on a loan. We couldn't have our own bank account without our father or husbands co-signing for us. I mean, I was just thinking about that. Like, my brother was born in 1973. My mom probably had to have my dad sign her in at the hospital. Like, you couldn't just go, get your own health care. So, I mean, I think this conversation could go on and on. Brittany, I thank you so much for all the information you imparted. Now we're going to get to the fun part, right, Allie? The lightning round. We ready for that?
Holly, I don't know if I'm recording anymore, so I don't know if anything I say is going to be on the recording from here.
Okay, so I will go for, so it looks like what we're going to do this time is we're going to pivot, and I'm going to ask the lightning round questions. Usually I take over most of the conversation, so, gift of gab. So Allie usually does a lightning round, but I'm going to do it just because we might be having some recording and technical difficulties. So yay if we are, or not, we'll get through it. So these are meant, Brittany, just for you to, answer what's real for you. If you need to expand on anything, you can. Just keep it short. And, we'll just go from there. All right. So lightning round question number 1, cash or